Life is full of curveballs, and when an unexpected financial expense comes your way, it can often feel like there's no easy solutions. Depending on your situation, you may not have enough money available to deal with the problem, which could be extremely stressful. So, what can you do? Well, one of your options could be a short-term loan. In this video, I'll break down exactly what a short-term loan is and highlight the considerations of using one, so you can decide if this type of loan is right for you. A short-term loan is a way to borrow smaller amounts of money and pay it back over a shorter period of time, usually within 12 months. So, how do short-term loans work? Well, like any loan, you complete an application, often online, and if approved, the money is usually transferred quickly, sometimes on the same day. You then repay the loan in instalments, which could be weekly, fortnightly, or monthly. One important thing to remember is that short-term loans often come with higher interest rates than traditional loans. This means you could end up paying significantly more than you originally borrowed. Short-term loans are commonly used by individuals who have limited credit options elsewhere, need cash quickly for an emergency, have a poor credit history, or are new to the UK. So, how much can you borrow with a short-term loan? Some lenders will let you borrow as little as £50, and some will let you borrow as much as £5,000. To help you make a more informed decision, let's take a look at some of the considerations of short-term borrowing. On the plus side, short-term loans can be quick and convenient, accessible for those with poor credit, and helpful in emergencies. However, they can also be more expensive than other types of borrowing and potentially harmful to your credit score if mismanaged. If you're considering a short-term loan, here are some important tips to bear in mind. 1. Only borrow what you absolutely need. 2. Make sure you can afford the repayments. 3. Shop around for the best rates. 4. Read the terms and conditions carefully. And 5. Consider alternatives like credit unions or government assistance. Ultimately, short-term loans can be a lifesaver in emergencies. However, they're not something you should rely on regularly, as they can send you down a vicious cycle of borrowing. So, if you're frequently struggling financially, it might be time to seek help from a debt charity or financial advisor.